Good morning, everybody. Thanks for joining us on Friday, August 29th with our pre-market prep session. I'm Michael here from Game Edge coming to you. As always, we're going to cover our three pillars: sentiment, structure, and trend, as well as talk about individual equities for today that are around key Gamma Delta levels. As always, come join us at gammaedge.us. You can sign up for our newsletter here. Go to this page, click on it, put your email in. We provide a weekly newsletter that's put out on Saturdays into your inbox. Again, covers all of our philosophy, methodology, as well as how to navigate the SPX option structure. Make sure you check out our free courses. All the education is free if you haven't joined us before. Sign up for that Game Edge Fast Pass course. This is our flagship educations course, all about options as well as our tools, methodology, philosophies, and how we navigate the SPX option structure and trade it daily. And then click on the pricing tab. You'll be taken to our Discord 14-day free trial. All the tools turned on, all the access to our extensive trading community, a group of traders that have multiple backgrounds as well as experience across the whole gamut of SPX and options as well as individual equities. We have new traders to experienced traders managing large accounts, former market makers and dealers to new traders coming in trying to learn how to trade options as well as zero DTE. So come join us. We'd be happy to help you get you up to speed and profitable as soon as possible. All right, let's go ahead and jump right into it. Market trend model, as always, is what we start with. Orientation here, this is based on the tick index. Obviously, the bolded white line is the CT, that's a cumulative tick. As long as we're seeing it rise above the colored ribbon and above the shorter term moving averages that we put on here for momentum, the bulls are in control as well as buyers in the overall market. We talked about that cross 2 days ago. That's what we wanted to see to start moving back to the upside and get involved along in the market. And we incrementally do that. We do progressive exposure. We have a lot of traders that trade ETFs via this market trend model, and we continue to watch this move to the upside. We did see flat on the filtered cumulative tick yesterday to up slightly. Obviously, this is institutions. Plus 1,000, minus 1,000 larger block orders. We'd like to see that continue to rise also. And then new highs versus new lows. Obviously, they're significantly outpacing new highs or new lows. So again, indicating more stocks are being bought than sold. Moving on to the filtered quality tick that we look at. This is what our P2P or our P-Trans to PGEX portfolio is based on. This is the quality tick that we watch. Again, seeing it move to the upside, expand above these moving averages, linear from lower left to upper right. Again, call speculators and buyers are in control of the overall market. And then seeing this slope of the colored ribbon, this is our longer look back period and how we position our longer term money. Again, rising positive slopes, nothing really to look at here. Just buying is in control of the overall market as we hit all-time highs yesterday. Let's move on to the SPXA. If you haven't joined us before, we separate the SPXA from the SPXP. Reason we do that is the SPXA is the institutional money. Obviously, you see these contracts don't turn over as rapidly as the SPXP. So this gives us our 30 or 40,000 foot view. We like to call the SPXA the cruise ship of the overall option structure. This basically sets your larger course for your week or your quarter or monthly or quarterly expirations. So we like to see how the big boys and girls are speculating and positioning their money. Obviously, call dominated above and below spot price, everything bullish here. As long as we stay above the transition area here, and even any pullback should be supportive as we have in the money calls below us. You see the 6,500 level, obviously just a massive amount of net delta as well as total OI sitting at that level. So again, we can continue to oscillate around that level, but supportive and bullish as long as we're staying above transition and as long as this overall structure continues to be green, call dominated above and below spot price. You see 6,600 here at PGEX. Obviously, that would be a local speculation area to the upside that we'd anticipate if we continue to rise. That would kind of be that first area we'd look for some stalling or price interaction. And you see the half and 50 levels here. That again are areas where speculation is occurring to the upside and most likely where price will continue to go. SPXP, now this is our speedboats. These are our daily as well as our weekly expiries. Again, These turn over much more rapidly, so obviously they expire quickly also. So this positioning basically is our tugboats or our speedboats basically that are turning the overall cruise ship, throughout the waters, navigating those rocks and low tide areas that you want to be able to get through. So that's why we look at the SPXP if you're a 0DT trader as well as a weekly trader. Call dominated above and below spot price. Again, supportive on any pullback. Yesterday we discussed this. This is all expiries turned on, and then we'll get into 0DT here in a few slides. But we talked about yesterday, any pullback in the market was going to be an opportunity to get involved. Yesterday was a prime example. We came right down to the transition area, had a couple wicks into the transition area, and then we started moving right back off above that. That provides a great opportunity for a long. You can manage your risk very easily against those transition areas. The post I had on X this morning was, if we're above the transition, it's a more positive call dominated environment for price appreciation, kind of a tailwind. You want your wind at your back. If you're below transition, I posted that it was bearish, but again, in a call dominated environment, it's not necessarily bearish. It just means the overall environment is not primed for significant price appreciation. That's where we can see some choppiness and a little bit more weakness. Now, if this was in a put dominated environment, then below transition definitely would be a bearish type look, and then above transition, if we're in a put dominated environment, would not necessarily be a bullish look, but it would be favorable, less favorable for downside movement. So that's how we kind of look at those transition areas. So make sure you keep those on your radar, put those out there. Obviously 6,500 is going to be important, and we see call speculation to the upside. We do see PGEX and COI at 6,500. We'd like to see that overall structure continue to advance to the upside, and that indicates that call speculators are speculating much higher with larger volumes and positions, so we could see a price appreciation to the upside. All right, let's get into the GEX ratio, or what we call gamma edge ratio. Basically, this is kind of a put call ratio, but we add a time component, which is gamma, so that puts a more emphasis on short dated overall structure and sentiment and contracts going into the overall market. So again, call versus put, a gamma ratio. Again, the red dotted line is that ratio. As long as we see it moving to the upside as price is appreciating, obviously positive divergence. If price was appreciating to the upside and we saw the GEX ratio dropping, that would indicate that out of the money call speculation is starting to dry up. Could be out of the money put speculation coming in, but that would be a obviously negative divergence, and the overall structure would not be supportive of price continuing to move higher. That's what we saw over here. Reference this. We saw SPXP moving higher, but we saw the GEX ratio dropping. Again, above 1 is still an edge to the bulls and call speculators, but we like to see this again, positive slope, again, matching the overall SPX rising. That indicates that call speculation is continuing to go into the structure. So again, we watch this day over day to see if this changes, if we see positive or negative divergence. And then you see what happened again over here as we saw negative divergence, and then SPX finally came to meet the GEX ratio, and then we saw that spike as we reached those extremes that we talked about at 0.6 and then 2.3 to the upside. All right, moving on to the delta balance. Again, nothing to see here. All of our charts here at Gamma Edge are hyperlinked, so you can zoom in. Again, this is basically separated between right-hand plane, which is above spot price. That's your out-of-the-money speculation for calls, as well as in-the-money puts. And then your left-hand plane is below spot price. That is your in-the-money calls or out-of-the-money puts. Again, delta balance is the aggregate, which is the blue line. As long as that's staying above 1 or just oscillating around, again, above 0, call speculators and bulls are still in full control. We did see a slight drop in the right-hand plane yesterday, as we head into today. Again, that's the out-of-the-money call speculation. So for me, coming into today, I look at that. How do I make a decision? Basically, I look at the highest peaks of the SPX structure, which would be 6,500, and I'd say, okay, the chances of us possibly going over 6,500 with the right-hand plane dropping may be reduced, right? So that gives us that idea of heading into this morning. And then I look at the left-hand plane. This is the in-the-money calls and out-of-the-money put speculation. Guess what? Out-of-the-money put speculation, not really present. In-the-money calls continue to be supportive. So again, I do not see the downside coming into the overall market at the moment with what we're looking at on these tools pre-market. So then we watch our intraday volumetrics, our vol M command that tells us the mass of where market participants are transacting option structure. If it is transacting higher above spot price and both of our centroids are rising, you can go back and watch some of our previous videos, then we'd anticipate a spot price to continue to rise, possibly above 6,500. If we're watching those intraday volumetrics and we're seeing speculation to the downside via out of the money puts, and then the calls continue to drop, then obviously we'd be looking for speculation to the downside. And then if both of those are crossing like we had yesterday for most of the morning, and then we started to see those slopes really start turning in a positive direction towards the afternoon. If those are crossed, then that would indicate consolidation day, usually between our drunken sailor range and transition areas if they're a little bit wider. So that's how we navigate everything for the intraday via our tools. Again, all available to our members, and we are in the trenches trading with our members using our tools, so we like to give commentary on that intraday also. So quick takeaway heading into today, everything looks bullish. Slight degradation of the right-hand plane, which is out of the money call speculation. So driving to the upside may be reduced a little bit. Left-hand plane continues to be supportive. No fear there, no speculation to the downside. So pretty much steady as she goes. Obviously, we may be contained between transition and drunken sailor, which we'll talk about here in just a minute. Moving on to net stat command. You see what I'm talking about. These are the highest sensitivity areas for today. Go back and review our pre-market prep yesterday. We talked about Vanna. If volatility was going to drop yesterday, opportunity for Vanna to really start coming into play. That seemed like that really kicked in possibly in the afternoon as volatility continued to drop. So today, 65.25 out of the money calls. Again, not a large right-hand plane integral, so that out of the money speculation is not significantly to the upside, but you see a large amount of in the money calls below us. That continues to be supportive. Obviously 6,000 way below us. Not really going to come into play today. So we move on to the charm level. Obviously, second order Greeks don't exert as much force as the first order Greeks, but these come into play as long as spot prices above and below these levels, and we continue to move sideways. Time will continue to tick today. Yesterday, 64.50 supportive out of the money, or sorry, today 64.50 out of the money puts. These will be supportive in the left-hand plane as long as we're above that. Charm will continue to grow as time ticks on towards the end of the day. 6,500 out of the money calls. You see the right-hand plane integral. This is winning the battle between left-hand plane and right-hand plane. So most likely price appreciation will be difficult if we stay under 6,500, cruise along right under that 6,500 level. Charm will continue to grow like a balloon, be difficult to move to the upside unless we see a large amount of volume coming in, speculation above 6,500. Then you can see our gamma levels. This really also came into play yesterday. Highest sensitivity, 6,500. We cross 6,500, we capture all these out of the money calls, they become in the money. Delta continues to grow in our book. Dealer's book gets slightly negative, they have to buy to hedge. Price appreciation continues to the upside. And then gamma obviously is the fuel, the gas pedal that's going to help once we cross 6,500 to possibly drive us up towards that 65.25 level. That would be that local peak. So hopefully that helps everybody. If it doesn't, sign up for the Gamma Edge Fast Pass. We cover this extensively with charts and commentary, and you'll learn very quickly about how to navigate this. All right, let's move on to what everybody wants. Zero DTE for today. Drunken Sailor range 6,500 down towards 64.65, even 64.70. Probably could have raised that, but that's kind of a local peak. If we'll roll back and forth between these overall areas. Again, low exposure in here could be a choppiness type area, and then our transition areas here. Below Drunken Sailor range, obviously a little bit more weak, but we still have in the money calls below us that will be supportive, as I just talked about on the net stack command. So 64.50 is that kind of local other peak gradient that we're showing with the purple. So I would anticipate that to be supportive. Most likely see a recovery off of that area. And then to the upside, if we're above Drunken Sailor range, and we do see the volume metrics indicating that out of the money call speculation is coming in, you see 64.25. That's that first local area that peak kind of we would be watching on the net stack command, high sensitivity area. And then above 64.25 would be CC 64.50. And these poor 66.50 call holders out here at COI, most likely they are going to be not happy today, obviously, with that speculation all the way up there. But you do see these other little gradients in here. So we'll see how the day plays out. Again, I'm not anticipating us to drive much higher than 6,500 unless we see that out of the money call speculation start to come in. You see the net OI here. We'd have to see a large amount. Obviously, long weekend heading into the Labor Day weekend. I'd anticipate traders after lunchtime starting to take off and head for the vacation spots most likely, and we might see OI continue to drop very rapidly. And we monitor that with our intraday volume tool to our vol M. We can see those transactions really start dropping into the hundreds at certain times of the day, and then that's just indicating that the spot price will continue to be sideways. So, all right, let's move on to our trading plan for today. Again, pretty much covered it with the 0 DTE. As you can see, this is the SPX Spread X. This is our pre-market price action, and we'll most likely continue just to chop sideways. Transition zones here on the 0 DTE, 6470 up towards 6500, and then you see our full expiry. So really trapped between the transition zones. The orange box is the Drunken Sailor range, obviously, so could be just trapped within that Drunken Sailor range. I would anticipate we come up and test 6500 maybe once, possibly twice. If we do start to ride above that, then we'll probably drift up towards that 6525 level if the vol M command is showing that market speculators, at least on a short-term 0 DT time frame, are speculating to the upside. But choppiness, most likely price contained between transition and Drunken Sailor range would be my highest likelihood outcome at the moment, with some more news and noise on the horizon. It looks like heading into 9:45 and 10 o'clock, looks like we have some other metrics coming out. So that's pretty much the game plan for today. Again, choppiness, price action, directionality would be difficult. This is where that'd be the opportunity for us to do spreads above an area if we do not see the volume metrics indicating we're going to drive higher. Obviously, if we're prices below or towards these lower areas and we do not see like we're going to push lower, then a spread below us would be a most opportunistic play. And then obviously you can always play ICs or condors depending on what the overall volume analysis looks like, to see if we're going to be consolidating sideways for the day. So anyway, hopefully that helps. Obviously, quick overview of some stocks individual. You can pause your player and go through these. Pretty much we're above transition areas on most stocks now, as we saw a large move yesterday. Again, these would be supportive on any pullback. We'd get involved towards P-Trans or 0 GEX levels. Obviously, AMD, Apple, Tesla continues to be supportive in those lower areas. NVIDIA, obviously 176, important there. And then some other stocks here. PLTR back above P-Trans, so we'd be looking for 160 there. Bob has already continued to run above PGEX. We see COTMC and COI up there. That could be areas that we could see stalling. Microsoft 510, PGEX. So you can see an overall theme. We're above transition. Some stocks are at an area where we most likely might see some stalling into those overhead areas as we're pretty extended to the upside. All right, Qs for the day. Yeah, we're above 0 GEX, 574. We see P-Trans 575, 577 above. Obviously, we need to get across P-Trans for an opportunity to appreciate up towards PGEX COI at 580. But holding 0 GEX is going to be important today. Obviously, below 0 GEX, a little bit more weakness. We see IWM continue to be above P-Trans. That's strong. SPY P-Trans 647 continues to be above there pre-market. We tested that multiple times. So that'd be an area that I'd watch that we need to stay above. And then obviously you have 0 GEX below at 646. So even if you tested down towards that level, that's still supportive and bullish for today. Don, DS zone for today, 6,500 down towards 6465, 6470 area. So. Okay, I don't know if you can hear me or not. So, all right, anybody else want to cover anything else? I can pull the web app up for today. We could cover any single stocks really quickly. We're at 20 after, so I can hang around for a couple more minutes. So, yeah, no problem, Don. Happy to do it. So, again, like and subscribe. You'll be notified when we go live for any of this stuff, as well as our midday recap and our post-market review or recap how the price action went for the day and the tools. So awesome, Puck. Good. That's what I want to do. That's what we always try to do. We just want to demystify this stuff and make it easy to understand above and below transition and where we're at and how to navigate. AVGO, yeah, we can check that one out. Check that out for you. Brian, let me pull that over. or sorry, B Hargrove. Not sure if your name's Brian, but so AVGO, call dominated above and below spot price, transition area. We're kind of within the overall top of transition area. You see COI below us, PGX at 310. So even though we're call dominated, price appreciation probably be difficult to get above that 310 unless the structure continues to advance rapidly to the upside. 320 is that COTMC. Out of the money calls go in the money, so that could be an area where we might see some stalling. Everything looks good there. Crowd, yeah, crowd's been doing very well, I think. Yeah, call dominated, fully above transition. See PGX 450. So that would be the local area. I'd look for price to start stalling. But yeah, crowd's been doing very well. Doing pretty good across the board there on crowd. Affirm, not sure about the OI on that one. So, oh yeah, 500,000 OI. Yeah, Affirm looks good. Call dominated, above and below spot price. Transition's a little wide there, but we see PGX at 95, COI at 100. So speculation to the upside still present. Getting above 95 would probably be a little difficult. But you also see the low OI as you go between these two strikes. So if you get above 95, driving to the upside towards 100 would probably be pretty, it would be much easier. Expected move is 24 points, 25. That expected move is a little off, I think. So we'd have to look at and recalculating that. So, but yeah, and that may be to the low OI also reason. I like to see, obviously, single expiry OI is only 121,000, which is above our 100,000. But you want to see, you'd like to see that a little bit higher, but they're on the single expiry, call dominated 95 and 100 above transition there. So Marvel, let's get Marvel. Put dominated, interesting. Yeah, we'll check out ME2. Yeah, well below transition. This may be a supportive area. I would not look to go long due to the put dominated structure. Very bearish overhead, tons of in the money puts. Price appreciation going to be difficult, but this may be an area where you see some stalling into 65. That's an index level there. You see POI all the way down at 60, so you definitely could traverse down there. But you see COTMP here, so out of the money puts become in the money. Again, that's an area where you might see some monetization. So I'd watch it around here. Not along though at all with the overall structure, so that would not be good. Hood, yeah, Hood I think looks good. Call dominated, slightly right at top of transition. So if you get above transition, I'd look for appreciation up towards COTMC and 110. But any pullback should be supportive, call dominated. You do see some puts spattered in here though. So I'd watch those key areas there. So a 100 would be a pullback area that I'd look for an opportunity possibly there. MU, let's check out MU. Call dominated, transition a little bit wider, but above below spot price 125 PGX COI. So you're going to need a lot of volume to get through that 125 area, and then you see COTMC at 130. So just a quick look at this would tell you what the overall structure is, but what I like to do is use our web app and we click through the expiries. And what I do when you click through the expiries is see if the structure advances after this expiry. So that's what you want to see, if this CGX POI in transition is advancing to the upside. Okay, so that indicates that the overall structure is advancing and call speculation is advancing to the upside. So that's how we do that. So you see on out to 912, you see that COI and PGX really jump. Obviously, that would most likely be into the monthly expiry. So again, opportunity to appreciate after these two expiries to the upside, 128. Now, if the structure is not advancing, then that really reduces the probability that price is going to appreciate, because price does not go where option speculation is not. So I don't know if we have GDX in here. I'm not sure if we do. Because of low OI on GDX. Oh, we actually have it in here. Okay, GDX actually has a significant OI. GDXG or XJ doesn't. Yeah, gold's been in the news. I see it's in a long-term consolidation. Looks like it's trying to move out of that consolidation. This chart is obviously not saying that there's a significant amount. It's call dominated, 65, but this PGX COI, you'd like to see it up at 65 if you're going to see a large move in GDX. And then again, this could change. So that's 829 expiry. So that's this expiry. Obviously, doesn't look like it's going to appreciate much for today. and then 9.5. The structure moves up to 63. So peak XCY moves up, and then we stay at 63, and then we drop back down to 60, and then we drop back down after the September OPEX. So you'd like to see this continue on out in time, but you see the OI drops off very rapidly there. So GTX looks good. It just maybe a cap on price appreciation, for the moment. TEM, last one we'll cover. Low OI, only 500,000. Put dominated for this expiry. Below transition, so that's bearish. Let's look at all the expiries. It's call dominated for all expiries, but significantly wide transition. That's uncertainty and choppiness, and it's inside transition, so I would not be trading TEM. So, all right, thanks everybody for joining us. Again, like and subscribe. Everybody make it a great Friday and trade them well. We'll see you later.